Hello and welcome to FX Addicts Weekly Market Analysis. This is Tim the Currency Professor, and today is Friday, April 19th, 2013. We've had some pretty good action this week, mostly at the beginning of the week, but also today a little bit. So we had some pretty good economic news and some fairly not so good economic news. Just a quick rundown on what we did get this week and what we're going to get next week, what's expected next week. This week, a couple of notable things out of Europe. The beginning of the week on Tuesday, zooeconomic sentiment for both Germany and all of Europe, much lower than expectations and the lowest that we've seen in several months. That's not really a good sign. That is mostly, it's a survey of large investors and analysts. So they're kind of in the know of what's going on in the economy, and if that's falling off, if their sentiment is falling off, that's not usually a good sign. In the U.S. on Tuesday, housing starts came out at 1.04 million. That's the highest since July of 2008. So the U.S. is slowly recovering for its housing industry, looking much better. On Wednesday, the U.S. Beige Book, Federal Reserve released their Beige Book, showed growth in all districts, which is a positive sign, very positive sign. So the Fed meets in 2 weeks and to decide interest rates and see if they will do anything, which at this point doesn't look like they will. And then today, Europe's current account came out at 16.3 billion. That was quite a bit higher than expectations and quite a bit higher than last month's reading also. Expectations were for 14.9, and last month was 13.8 billion. So quite a bit higher, and the euro did rally earlier in the session and has since fallen back. We'll look at those technicals here in a minute. Over the weekend, well, today and tomorrow, we have IMF meetings, 20 meetings. So there will probably be some announcements from those kind of things that will move the markets first thing on Monday's session. So we could see some gapping on Monday's session. Next week, notable reports on Monday in the U.S. We have existing home sales, so it is expected to be above 5 million. That'll be the first time in a while, so that does look very positive. If that comes out at that level or even higher, that'll be good. Tuesday, a bunch of PMIs coming out for China as well as all of Europe. No real expectations of any big numbers there. Pretty much status quo. So if we do get something outside the box there, it could move the markets. Also on Tuesday, new home sales, 420,000 is what's expected. That could move the markets if it comes out much higher than that. Wednesday, German IFO business climate, expecting 106.4, 106.7 was last month. If it comes out dramatically different, that could be an issue. If it comes out lower, it certainly could move the euro, and it comes out higher, it could move it also. Right now, it's very vulnerable to both directions. Also on Wednesday, durable goods out of the U.S. That can be a market mover sometimes if there's really nothing else available, and there really isn't too much coming out that day. So it's possible that could move the markets. It's a very volatile number. Thursday, GDP out of the UK. Expectations are for an increase of 0.1%. That'll be the first increase they've seen in a while. So if it does come out positive, that would be good for the pound. If it comes out negative, well, that's not going to be so hot. Friday's the big day. Friday we got numbers coming out of Japan, all kinds of economic numbers, CPI, manufacturing PMI, and most importantly, the Bank of Japan meets also. So the last time they met, it really moved the markets. We'll see what they do this time, and it's a very good possibility they could do something else, implement something else to get their economy rolling. So everyone's going to be watching for that. Also on Friday, big number from the U.S. Advanced GDP. So that's the first GDP reading for the first quarter, same as the UK the day before, first quarter GDP. So expectations for the U.S., 3.1%. Last quarter, if you remember, was a real disappointment, came in at 0.4%. So everyone's looking for this quarter to really pop, and we'll see what happens. So that is it on the economic stuff. Let's quickly look at some numbers here. The euro up right now about 15 pips. We were up about 70, 75, 80 maybe earlier, and we fell back now quite a bit. And technically, if we don't move up and make some new highs in probably the next 4 or 5 sessions here, we could have a top in here, an interim top, and we could fall off quite a bit. So technically speaking, this area right in here is going to be our support, which is just about the about 130.15 to 130 even area, all down into there. And then on the upside, we would need to close up here above these highs, and we're going to need to do it soon. 132.20. Now the stochastics pointed lower, look very strong to the downside. So right now, inclination is that we're probably going to start to fall off again. If we look at the weeklies, we can see almost a head and shoulders type thing forming here. So we could get up maybe a little bit more in the weeks to come and then fall off, or we could rally all the way up and try to make a double high up here, which would put us up here around 136 on this minor trend resistance level here. Now we do have a pretty good solid bottom here, but it's starting to fade. We should have been up this week again. We should have closed up above this back area back here, this back shoulder area. So we should have closed this week up around 131.50, 131.70 area. And the fact that we're not doing that is not very positive. Now on the monthlies, we still got about a week, solid week and a half here till the end of the month, but it's not looking great. If we had closed, or if we closed the month out above last month's high, then that will be positive and we could turn around and go higher. The problem is we really had no reason to stop here, and we have no reason really technically to stop here. So we're kind of bouncing around. It's really moving aimlessly, and that I think has a lot to do with the fundamentals out there. There is so much enthusiasm to buy into Europe, thinking that Europe is going to get better by the end of the year. And then when we get reports out and it doesn't look that way, then it's contradictory. And so we got this push and pull going on there within the sentiment. And it's really dragging the market up and down, and we're essentially going nowhere. So kind of dangerous market to play. Pound dollar. Down about 43 pips right now. We were up quite a bit. We were up about 80, 90 pips earlier, and really fell back about late in the session, mid to late session, and not looking so hot right now. If we were to close a little bit lower here, if we were to close down here below the most recent lows last couple of days, that would be probably very bearish, about 152, 152.10 area. We're not that far off of it at this point. Now, technically, we could get all the way down to this lower channel line and then bounce back up, so there is that possibility. But again, it should be on an intraday basis. So we should fall off and then bounce right back. Now, we'll see on Monday if that actually happens. Then we could start to turn this around. We could rally up one more time, which would give us a nice little three wave here, all the way up to about 155 area, 155.50 by the end of next week. Now on the weeklies, we still got a pretty good strong pattern going here in the stochastics, but we're really starting to wane on the technicals. It's really starting to slow off here, and we might even be putting in a top here, the way it's starting to look. If we close this week down here about this 150-180 area, which is quite a ways now away, that would be very bearish on a weekly basis. Monthly, well, monthly wise, we had this huge fall off. We closed below this support line, and now for a couple of months we're bouncing up, and it's more or less a dead cat bounce. We're really not seeing anything significant. If we don't close this month back up above that trend line, then we're certainly headed lower. It's just a matter of time till it works its way to that point. So longer term doesn't look very good. U.S. dollar against the Swiss franc up very slightly now, up about 6 pips. We were down most of the day and down quite well. We had a nice day here midweek, Wednesday, where we just rocketed it up and closed up very strongly. So we really need to close, though, above 93.35 on a daily basis. And we've been pushing that limit now for 3 days, and we haven't quite made it. If we look on the weeklies here, we can see how this week is looking good. We got a little bit of a spike low, and it's looking good. But what would be a whole lot better is if we closed above last week's highs. And we're not too far off, but technically it doesn't look like we're going to do that. It'd be 93.63, and that would be pretty tough at this point, I think. But you never know how we close up. We could have a last burst at the end of the trading session. And on the monthlies, well, we really need to turn this thing around for the monthlies because it's not looking very good right now. If we were to close here at this point for the month, it would be actually fairly bearish. So we're looking for the next week and a half for a significant rally here to take us up at least close to that trend line or above last month's highs. U.S. dollar against the Japanese yen continuing to march higher pretty much all week. We had a little bit of a fall off here at the beginning of the week, made some new lows for this move, and then today now we're shooting right back up. So a lot can certainly happen with this market. Of course, we got the meeting in a week from today from the Bank of Japan, so a lot can happen. We're up 150 pips today. Looks very strong technically on the dailies as well as on the weeklies and the monthlies. We just look very, very strong. Look at the way we're going to close here this week. Looks very good. Nice tail here to the downside. We're almost exceeding last week's highs. Boy, if we could even exceed last week's highs, close above that, that would be very, very strong. And monthly wise, well, we're just kicking butt here. We're rocking and rolling, and we'll get up here, probably close the month out somewhere well over 100, maybe 102, 104. We could easily do that, especially with the meeting next week. So looks very, very strong, looks very, very good. Euro Swiss up a little bit today. We're up about 16, 121.90 area. I've gotten these channel lines in here, and we finally have traded outside of it, and we're starting to work our way back up here now. We got a little bit of a double bottom going in here with this kind of stuff here, and nice little top. We need to close above this top, so just about right up in here, about 122.03. So if we could close 122.10, 122.20 area, that would be very, very positive for this market, and we could start marching then up quite significantly. On the weeklies, starting to look pretty good. We got a little bit of a turnaround here in our stochastics down at the bottom. We got a little bit of a curved bottom happening, and we got this kind of descending triangle thing going here, which is a tall tale sign of this market to explode up. We've seen it in the past back here and back here a couple of times, so it does it with pretty good frequency, and we're really looking for that to happen again here as we get further and further involved with timing and what's going on in Europe as well. Euro yen up very nicely today, up about 200 pips, back above 130, looking like we'll probably close above 130 for the week. Looks good. It is not as strong as the dollar yen, just because the weakness of the euro is dragging it down a little bit. If we look at the weeklies here, we can see how on the weeklies we still look strong, and we're certainly probably going to run up to that 138 level, so about another 800 pips from here. But then we'll probably run into resistance, especially if the euro starts to fall off. The euro starts to get weaker. Now you got two weak currencies fighting it out, and we'll probably end up in a consolidation area, and it'll probably be just like back here where we were for about 138 down to about 130. So we could bounce up to that 138 and then fall back to the 130 area and be there for quite a while. We look here in the monthlies, and we could see how we could end up in that area probably for 6 or 8 months. It's a very, very good possibility. So that is it for this week. Thank you for listening. I did go over my time a little bit, and I do apologize. Please come to FX Addicts. If you're not a member, please stop on by. See all the things that we have. We have classes available. We have a live trading room. We have lots of stuff. So feel free to stop on by. And if for some reason I'm not available, shoot me an email or get me on Skype. Everything's there on the website. You can just click on everything, grab me, and I will get back to you. Thank you.